Rates live with the wait a few minutes here to get started, so hang tight. Appreciate everybody tuning in early. As you tune in, feel free to drop a comment there in the chat. We'll wait a little bit here to go live on all the different platforms. We are streaming live on YouTube, Facebook, and LinkedIn. So give us just a minute so we can go live on all the platforms. We appreciate everybody tuning in early. I see people dropping comments. Thank you for the comments. Dario, Raul, Adam, Yakita, Sandra, appreciate the comments. Shout out to you guys for tuning in. Cassandra, appreciate the comment. We'll get started here in just a moment. Jason, Charles, appreciate the comments. Well, looks like we are good to go. So let's go ahead and get started here. We'll take the chat off the screen, but feel free to keep dropping comments and drop any questions that you have as we go through our deep dive topic later. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show at 11 a.m. Eastern is go through some live mortgage rates, and then we do a deep dive into a different topic every day. Today's deep dive is going to be bank statement loans, which is one of the things that we specialize at here at the Mortgage Calculator. Before we do a deep dive, we'll go ahead and pull up some live rates. So Jose will do a deep dive into that topic here shortly. But before we do that, Nick will pull up our pricing tool and go through the live rates for today. So Nick, let's pull up the pricing and see what the market is looking like this morning.
All right, let me switch my screen and we'll check it out. This is our pricing tool. As Kyle explained, this will show us the general rates for today, August 28th, Monday, just after 11 a.m. Eastern. All the rate sheets are coming out as we speak for all our standard programs. It will show us the rates and the APR. If you'd like a full breakdown of all the fees that go into the APR, a itemized loan estimate, please get with one of our team members. We have over 300 loan officers in 24 states for primary homes. And we can do our business purpose investor loans in 44 states. So for our demos today, as we do every day, we'll set up a general scenario so we can compare the APR across the programs. We'll start with a $400,000 loan amount for all our demos. We'll do an 80 LTV, 80% loan, 20% down payment. We will do a desired price of $99. That means we'll ask the computer to find the best rate at one discount point in cost. And we'll compare our different programs. We'll start with conforming conventional as we do every day, and we'll check out FHA to compare. And then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs, such as the bank statement loans. That's the topic for today. We also offer VA and USDA. Remember, VA is only for our eligible vets and active service members. If you are eligible, let us know. We'll quote it, no problem. And USDA is only for eligible properties. If you are shopping in a rural USDA area, let us know. We can quote that up, no problem. So we'll start with conforming conventional. We'll do a purchase, 30-year fixed, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. Estimated FICO score of 760 we'll use for all our demos, and an estimated debt-to-income ratio of 40%. So with these settings, as we do every morning, let's see what the conventional options are. Looks pretty much identical to last week, I believe. 7.375 rate, 1 discount point in cost. Final APR puts us at 7.542. So hopefully we see this fall this week. With some of the news that should be coming out. Now, if for any reason our customer doesn't qualify for conventional, we typically want to check out the next option with the same scenario, will be FHA. So we'll keep everything else exactly the same so we can compare APR across the programs. And FHA does allow a little more leniency on credit events as well as a higher debt to income ratio, but we'll keep it identical so we can compare apples to apples. And looks about the same as it was last week as well. 6.625 rate, 0.75 discount points at cost, puts our final APR for FHA 7.209. So it's actually a touch cheaper if our customer qualifies for both, which has been the case recently with the changes for FHA. So if you qualify for both, definitely don't forget to check out FHA. And for our customers that must use it for the debt to income ratio or credit events, definitely a welcome change there, as this APR does include the upfront and yearly mortgage insurance. Now, where we love to specialize here at the Mortgage Calculators, if our customer has trouble qualifying for either program, many other banks or lenders don't have other options besides conventional or FHA, but fortunately we have over 5,000 additional programs under expanded guidelines, also known as non-QM. So we will select that. Everything else will stay exactly the same. However, we can use our alternative income here. So full docs, what we use for FHA and conventional, that's 2 years of tax returns, what most people are used to. So we will choose this option to take advantage of our asset-related programs or business bank statement programs. Investor loans are only for investment properties. We'll talk about that shortly. Our personal bank statement 12-month is our most popular option by far and the topic for today's show as well. We also have RSU, stated, VOE, 1099, P&L, no income CDFI, all kinds of different options. So for the demo here today, as we do every day, we'll do the bank statement 12-month program for our self-employed borrowers. Many times when our self-employed borrowers use their tax returns, they may have trouble qualifying at all or may just not be able to get quite enough income. So we solve that problem for our borrowers here by using no tax returns involved at all. We're simply going to use their last 12 bank statements, and we're going to determine a debt to income ratio of 40% in this example, using just their cash in their bank statements, no tax returns involved. So many times our self-employed borrowers will qualify for double or triple the income using this method and can therefore get the home they really want. So let's check out the non-QM bank statement options. Obviously, Jose is going to go into a detailed dive into this, but the best option we have at the top, they're a little bit more expensive, 7.5 rate, but 2.625 discount points and cost. So a little bit more cost there, puts our final APR 7.621. So last week, the bank statements were actually a little bit less than conventional in a couple days. Today, we're just a touch more, which is more normal. And some of these other options, if we scroll down, for other programs under bank statement may allow things like bankruptcies or foreclosures or other credit events that would otherwise cause your customer to not qualify. So tons of different options here. Please get with our team to find the best one for you. There's hundreds of different versions. Now, before we go into Jose's detailed breakdown of all the different ways to use that program, we always want to do some investor live pricing. So for our final demo here, we'll select investment property for occupancy. We'll set the LTV the same as all our demos, 80% loan to value, 20% down payment, and we'll compare our two options for investment properties. So we have conforming conventional programs, which are probably a little too expensive to be used at the moment, and we have our non-QM expanded guidelines options, which are amazing for our investors. So first we'll check out conforming conventional. Everything else will stay exactly the same. All we've edited here is the occupancy. So we'll see what adjustments the conventional programs have added for investments. And as true for the last couple weeks, unfortunately, this is not really a feasible scenario, but this is just for example purposes. 7.625 rate would be the lowest or the highest rate, actually lowest cost option. But the cost of 4.75 discount points is probably not compliant to even offer our customers, nor would I recommend our customers take advantage. Final APR there would be 7.917, so pretty expensive as well. And many investors, even if we could present this option, would rather not spend $19,000 in cost in order to take advantage of a conventional program. So unfortunately right now, there is really just no feasible way to do a high LTV investment property loan under conventional programs. That's where we love to present our non-QM options. So to solve that problem for our investors, we'll pull up our final demo here for investment properties, and we'll use expanded guidelines, also known as non-QM. So the most popular income option that pops up here is going to be our investor DSCR loan. That's because it's only for investment properties and it doesn't require any income or employment from our borrower. We simply use the estimated rental income to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA, the mortgage expenses we're proposing, aka the property cash flows on a monthly basis, that's a ratio of 1 or higher. We even have options for properties that do not quite cash flow on a monthly basis, which would be a DSCR ratio of under 1.00. For the demo though, we always put 1.5, which is the highest value, so we can see all the options pop up. And the final thing we select for a non-QM investment property is a prepayment penalty. 3 years is standard. That's what we always use for our demo. We can select 0, which will cost our customer more, but also limit our loan programs. And we also have our 5-year, which will cost our customer less, but also limit our loan programs. So in order to see all the most common options, we'll select 3 years here. So with those basic settings, let's check out the DSCR rates. Woo! Amazing. I think this is the 3rd show we've ever done where DSCR blows conventional out of the water here. Not only is it a more reasonable offer, but the APR is actually lower. So our best DSCR option here, 7.75 rate, 0.975 discount points at cost. Our customers are happy there with that cost. And our final APR, 7.816, less than conventional. This is a mind blower, guys. This has never happened before in pretty much history of the U.S., right? So just because conventional rates are crazy, our institutional investors that offer these specialty programs are hungry for loans, guys. And these are great solutions for our investors. So definitely recommend any investors out there definitely take advantage, as these programs are definitely more feasible and better priced than conventional at the moment. Some of these other options have a little bit higher rate and cost, may allow things like bankruptcies and foreclosures like we went over before, and also may allow things like short-term rental income, very common request we have for investors looking to use these DSCR loans. So tons of different options here. Please get with our team. They'll find the best one for you. Now, let me switch my screen and we'll get into our detailed topic today. So today we will break down some more examples for bank statement loans. So we do the live pricing every day with the basic example at 80% loan to value, pretty common scenario. However, Jose will be able to show all the different ways we can use our bank statement loans and explain a little bit more about why we would use these options. So let me go ahead and make it big here, Jose, and you can take it over.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Bank statement loans have definitely picked up the slack left in the market by agency, whereas agency loans with the increases in interest rates have been reduced. They have been made up by the increase in the origination in bank statement loans, which probably make up over 60% of the origination in non-QM. The reasons with that are obvious. We had quite a few self-employed borrowers that were probably pre-approved full doc going agency at 3% interest rates that would not be able to qualify at 6.5% or 7% interest rates on agency, but would definitely be able to qualify using either business bank statements, personal bank statements, or a combination of both. So we would definitely use this program as an option to assist our self-employed borrowers in qualifying under additional options. We could also use our P&L program for that as well, but today's topic is bank statement loans. With the popularity of the bank statement loans, more funds going into secondary pursuing bank statement loans, so hence we have more options, and the bank statement rates have been declining In many instances, the interest rate for a bank statement loan and a full doc loan under non-QM are going to be the same or very similar. They may be only an eighth of a percent difference in rate at best, when there is a difference between the full doc option non-QM and the bank statement option non-QM for a particular investor. So today I'm showing mainly primary purchases, because I wanted to throw in there some high balance loans so that the audience can know that we are also the source for your high balance bank statement options. So our first option here is at 90% loan to value, which is the highest loan to value possible for non-QM loans at this moment. Maybe with the increased liquidity would cause them to add some additional twists to what we can do, but right now we are at 90% maximum loan to value. And also no separate mortgage insurance. So any risk for the higher LTV is taken into consideration with the slightly higher rates as we do increase the loan to value. So here our par rate is 9.375, our lowest cost option. But you will note we can buy that all the way down to 8.125, which is an amazing option. Our highest LTV on the bank statement purchase for an investment property is 85%. So the rates do go up a little bit, but not that much, because you can still offer your customer 9.499 as your lowest cost option, and you can buy it down to 8.375. So that's a very good investment property option. Now, our highest cash out on the primary is 85% LTV. So 85% highest cash out, and that is for a primary. 9.875 is providing a lender credit of $531, and 9% is your lowest rate option available for your investment cash out. Primary, 85% primary cash out. Investment cash out is 80%. That is the max LTV for the investment property cash out. Pretty good rates there. You're looking at 9.25 is at par, and you can buy that down all the way to 7.75%. So that's pretty amazing when you consider this is investment property cash out at an 80, which is higher than what you would be allowed to do a cash out on an investment property in an agency loan, coupled with using bank statements. So this is pretty amazing when you take all of those factors into consideration, and we're still beating agency at an LTV they would not be able to touch. So now I'm giving you a few high loan amount options so that you can also note that, we can help you on those nice large loan amounts. Here we have a primary purchase, $2 million loan. This LTV is 72.73%. So it's a $2 million loan, $2.75 million purchase. Look at those rates. That is absolutely amazing, considering this would be if you were not going non-QM, you'd be calling this a jumbo loan. Here in this case, we're using bank statements, right? 12 months bank statements to qualify, and you can still get 7.875 at par.
Which is about the same as a jumbo loan.
Yeah, but using bank statements, which
Yep.
is amazing, right? And 7.375 as your lowest cost option. So that was under 75%. So now, same purchase price at 75% LTV. So our loan amount now, 2,062,500. You're looking 8.125 as your lowest cost option. You can buy it down all the way to 7.375. And then,
so exceeding the $2 million amount does cost quite a bit there, is what
yes,
you're indicating there.
yes, absolutely. 2 million and below, there's a little bit more action going on in secondary. So, they give you better pricing, but now as we increase it, we do get a couple of loan level price
So what you're
adjustments.
indicating there is it might not be worth it just to get the extra little bit of money with the
Right.
increased cost there, just for the extra $62,000 there
Yep.
in your example.
Yep. And if we were to look at this where we were at 7.875 at par versus 7.875 costing you 15 grand. So now our last example is 80%, right? Now the borrower really wants to, maximize the use of the financing. So we're looking at a $2.2 million loan. So now obviously at this point, it will make sense for the borrower if he wants to get the 80%. And we're looking still very good rates here. 8.25 is almost at par. That's like costing you at 0.1 something. And you can buy that down all the way to 7.5%. So very good options considering we're using bank statements, really large loan amount. It's a win-win situation for everybody involved here. We can take the loan amounts up to $3 million also, by the way.
Yeah, I guess you should have went to the max.
Yeah.
But we did have one question here from Owen. So these were all 12-month examples. Is that correct, Jose?
Correct. I mean, for this example, I used 12 months business. There is no price difference in going business or personal. There is a pricing difference in some investors that offer a 24-month period versus a 12-month period. Usually it's going to be like a quarter of a point difference in the pricing. But if you are going to do that, keep in mind, as you do extend it out to 24 months, you do have to start worrying about choppiness in the deposit trends, certain other inconsistencies that might be showing, like if those prior 12 months showed a lot higher income, and now in the most current 12 months, you have lower income, you could have what's viewed as declining income trend, and the loan may be denied if it's too big of a difference in the decline.
But if you are competing, obviously that can sharpen your price by adding 24 months in some cases. So
yep.
Definitely good to know both ways to take it. I don't see any other questions, so I guess you can wrap it up here, Kyle.
Yeah, absolutely. Great options there. Some amazing things going on with the rates because of how conventional rates are doing. So awesome stuff to see there. Thank you, everybody, for tuning in. Remember, we do this show at 11 a.m. Eastern every single weekday where we go through the pricing and do a live deep dive into a different topic. So we will be back here with a new topic tomorrow at 11 a.m. Eastern. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all tomorrow at 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.